If you're looking to get a funded trading account, it's important that you partner up with a firm that is reputable. A firm that's led by a group of traders that have spent decades on trading floors and desks all around the globe. And it's important that when you take an assessment, you follow one with sensible rules that are easy to follow, that promote good risk management skills. Because ultimately as a trader, that's how you're going to succeed in the markets, is with good risk management. And also, you want to be surrounded by a community of traders and have tools at your disposal. And that's what ForexAnalytix is. So in the month of July, if you take a trader funding program assessment, you're going to get a 45-minute consultation with me, Blake Morrow, president of ForexAnalytix. And I'll spend 45 minutes with you one-on-one and talk you through the assessment process. So book your assessment today. I'd like to talk to you soon.
Mark, great to have you back here on Face. How have you been?
Doing all right, though. Tell you the truth, I just got tested positive for COVID, a mild case. It's only the third time I've had it, so what can we do?
Wow. Yeah. I hope the symptoms are mild for you. Or
Sure.
asymptomatic be better, wouldn't
Yeah,
it?
the working from home is good, and it gives me time to stay focused on what's going on.
Okay, so I want to start here before we get to the general market. So Blake brought to the table here in Face about your Aussie Kiwi long. All right. So what I'd be interested in is your thought process, the anatomy of it, what you were thinking fundamentally, or was it more technically driven? But it's been a huge trademark. Congratulations on that. What did you see? Did you see a divergence coming in central bank policy between New Zealand and Australia?
Yeah, Dale, for me, I know that you guys talk about technicals and fundamentals. I don't know really how to separate them. I know, early in our
Okay.
careers, there's a big battle between the two approaches. But for people who are involved in the markets, I really don't know how to decouple them. I saw positive technical formation. It looked to me like uh, the uh, uh, the Kiwi had strengthened sharply earlier this spring against the Aussie. That had looked like it had bottomed. And then I was looking at the market. It wasn't taking seriously the RBA's hawkish rhetoric. And while at the same time, I saw them doubting the hawkish New Zealand rhetoric, which they reversed this week. And so I think it's a combination of the technicals giving me a low risk opportunity to enter and catching the right move on the diverging to the central banks. I've raised my stop now to I'm in from below 109, and I've raised
Nice.
my stop now to 110 60, I think.
Okay, so was this a pullback range at, see, so this is a great example that you didn't have to buy the bottom to participate in a real nice move. You didn't have to be a hero and make the tough money, because you'd
I'm
be
no
so
hero.
grinded out.
I'm no hero. I mean, I had to wait for it to
Yeah,
bottom to have some
yeah,
confidence that I wasn't just trying to catch a falling knife.
right. Yeah. I have some scars.
Yeah,
I
I have four fingers on each hand.
All right, Mark. So let's talk about the dollar in general. Here's my look. I have it, broke a shorter term trend line last week, and on the number today, it's trying to break down. Cable is pushing through major areas right now. Here's the weekly. So it knocked at the door on the door of the 200 week. All right. Aussie's been acting respectable, never gave anything back. That was part of your successful trade. Canada is threatening a breakdown at 36. Is this a dollar story
I
or
think,
because there's great action in different currencies that aren't related to each other in any way,
yeah,
but more of a dollar theme?
I had approached it coming into this week as a dollar move. But
Okay.
I tell you, I have three concerns here. Even though, I saw this softer than expected CPI, I saw the dollar come off. I've seen, I've seen what's happening. Sterling's at new highs for the year, I think.
Yeah.
But here's my challenge. I think with being too bullish on the dollar right now, even though I know everybody's excited about this breakout and the soft CPI. First, the market is already pricing in two Fed rate cuts this year. It's hard to imagine a third one, partly given the schedule, given how many meetings are left, three meetings after this month's. And I think after Powell spoke this week, there's no way that the Fed can cut rates at this month's meeting. So that really gives us three meetings in the end of the year, two rate hikes priced in. Hard to see the third one. Secondly, I think that the intraday momentum indicators were already stretched before we had the CPI report. And thirdly, one of the things I look at for the dollar index and for the euro is the 2-year US German interest rate differential. We have come
Okay.
down over 25 basis points, and we are holding support at around 170. That is, the US 2-year yield is about 170 basis points on top of Germany. We haven't been below there for over 3 or 4 months now. That's a solid support, and I'd imagine to hold even after today's CPI report. I think the CPI was softer than expected, but here's what it looks like to me. The Fed will have more confidence, but the market was already pricing it in. If you look at the today's number on a 3-month annualized basis, you're looking at a 0.8% CPI for Q2, and that comes after a 4.4% CPI in Q1, annualized rates. I think that's how the Fed or Fed officials look at it. So my thinking is that this has already been largely discounted by the markets.
Okay.
We rallied mostly before the number. We had another leg up as as people reacted to the headline number. But I'd be more interested in selling the dollar, waiting for the dollar to.
You want to buy this dollar weakness here pretty soon.
Yes, but I think that this move today, move this week is a little bit far. I'm looking for a pullback in the foreign currencies before I think it's clear to buy again.
Okay. All right.
And maybe I can quickly add about you guys are showing a picture of a chart of the CNH, and I've been following that closely. It looks to me like there's a head and shoulders top in it, which really to me is part of my story. It's not about the Chinese. We have this. I think that in the West we have a lot of like a narrative about how evil China is. And I don't want to get into the politics of it, but I don't see them using the currency to boost their exports. I think the currency is kind of passive. That is, if you tell me what the yen is doing, I have a very good idea what China is doing. And I see dollar yen breaking down. Of course, it's holding 160, but it looks to me like in CNH, you've got a head and shoulders pattern there. And though I don't see it on the chart you're showing now, maybe it's just
This is the CNH. It's a weekly. You want something shorter term?
maybe just show up a daily. I think you could see it a little bit on the weekly, but it's really more clear on the daily. But it seems to me like there's a head and shoulders top here, and we're going through the neckline now. Call it 728.
Okay. You're calling this little formation here the
Yeah,
head and shoulders. Okay.
yeah, I think so.
All right. Okay. So, I was looking for something larger, but yeah, in the end, selling off too. You looking for more downside here?
Yeah, I think
So
I
go
think the
ahead.
market has got caught off guard by, we've got it. To me, the yen is largely explainable not by the U.S. 10-year interest rate differential with Japan, but just the U.S. Treasuries. You tell me U.S. 10-year yields are down 10 basis points now, and I'd say dollar yen is going to be lower.
Look at that. I mean, we're breaking hard. In the end, a lot of people were counting on the 60-20 level mark holding, which it did last week. But I mean, this looks significant here.
We're through
This
that,
looks
and we're through 160 right now. I
what
think,
what
I mean,
what
I think
a
that if the
lot of
dollar,
people thought we'd even trade 164. I don't know. Maybe we will, but nice divergence up here. I
yeah,
think this is a big negative dollar day. So here's a dollar mark. Where do you want to be a buy around 103?
I think so. I think that's a
Okay.
reasonable level. But again,
Okay.
I mean, for me, in the big picture, the dollar's turning. This is a
It
big, what you
is.
have up here, the dollar index. This is a big topping pattern forming, I think.
We're going
And
under 100.
I think so. I think this
I
is it
did.
for the dollar. I think that we're going to have a lot of people, including myself, have been looking for the dollar to turn. And after being disappointed several times, with the Fed seeming now set to cut rates once or twice, my bias is twice this year. I think the dollar is turning over. The key, like we saw in Q4 last year and Q1 this year, is U.S. interest rates. When U.S. interest rates fell in Q4, everybody got excited about the Fed's pivot, about
Yeah.
the Fed was saying 3 cuts. The market was pricing in more than 6. The dollar fell, even though global interest rates fell. The key is U.S. interest rates. And the same thing now. The key is U.S. interest rates. And what I'm talking about in the short term is just that the dollar is a bit overextended on the downside. So I'd
Okay.
be looking
So
for a
this is
bounce of
a
the dollar to sell.
counter trend scalp is what you're looking for at this stage. Do you, I've been talking about this 420 level, been constructive, treasuries. And to me, this is a major breakdown. 2 lower highs and 420, 470 gives us 350. Is that 2 cuts or more?
Oh,
That's a measured move.
Yeah, I think that'd be more. I mean, but remember that once the Fed begins cutting, and this is what we saw in the dot plot as well. The Fed says they're going to cut rates once this year. The market says twice, but the Fed says they're going to cut rates at least 3 times next year. This is the beginning of the monetary easing cycle, and so
Do you
there
think
is.
they're late, Mark?
I don't
I've
know. I
talked to
mean,
people that think that, they already waited too long. They should have been doing this 6 months ago. The
well,
S&Ps would say something else, but
yeah, but
they're not begging for a rate cut,
Yeah,
or
Dale,
are they?
there seems to be a cottage industry that no matter what the Fed does, it's wrong. Central banks are wrong by definition. I think that
Okay, yeah.
when we're in that position of
I'm
having
in
to
that
decide,
cottage.
yeah, me too often, but I think that I think that the problem is that it's not just an absolute. Is the Fed early? Here's the problem: the Fed has to respond not to the economy today because of the lag of monetary policy, but where they think the economy is going to be 3 or 6 months from now. And this business cycle has been very unusual, to
Yeah,
say the
that
least.
I
And
give
and
that
so
to you.
you
Yes.
know, and so I think that the Fed was maybe a late to begin tightening. Are they late to begin easing? Well, I think you know I saw this cartoon about a guy jumping off the top of a building, and when he's past the 70th floor, he says everything's still okay. He's past the 50th floor, everything's still okay. This is the soft landing. The soft
Yeah.
landing is that brief period of time between the end of the business cycle and a recession. We are in that soft landing that I think is morphing into recession. Whether the recession comes early next year, late next year, I think it's going to be happening.
Okay. I want to ask you about something since you brought up the recession because this I learned from you, Mark, in a previous interview, and I talk about it. Also, tell the people who mentioned it to me, and I say, Mark Chandler says that every modern day recession started with an oil shock. Okay. And I've been watching WTI. I won't short it, even though there are a lot of bearish counts and so forth on it. But we're in this range, and I know maybe I'm being conspiratorial, but we held 80. We've been in this range for a long time. Wouldn't be the last nail in the coffin be that the bears are wrong, and we're headed up towards 100 or higher this summer to really put the kibosh on the consumer who's already going to be paying huge utility bills this summer. Would
Yeah,
that do it? Would that be enough of a shock with everything else? You don't need $200 oil, but just getting it back over 100 would have impact on the consumer.
yeah, I suspect that if oil were to say get much above $90, that the U.S.
Yeah.
government would open up its strategic reserves again. And it's
They
not a
have some
political thing,
left. What they
of
have
course.
left.
And here's the other thing too, that why I'm a little bit more positive on oil in the short run. Just this week, OPEC reported that its June output was at 11-month low, and and the Saudi exports were its lowest level in more than a decade.
Wow.
And so I'm concerned about not the demand side because I think weak U.S., weak Europe, weak Japan economy, and weak China is really is of course negative for oil. But I'm looking at the supply side, and I think that's tightened faster. I'm not sure. I follow oil, like you say, but to me, the cake is already baked as far as the end of the U.S. business cycle, and we're seeing weak numbers in Europe, especially those industrial production numbers. Germany was supposed to be up like a couple tenths of a percent. It was down over 2%. France was down over 3%. That's just in the month. That's just in a 1 month move. And so I am concerned global economy turning over, not just the U.S.
Okay, that's interesting. And you look at what, people have said to me, Mark, because I've been bearish a dollar for a while looking for this. And they would say, well, Dale, how can you be bullish something like the pound with all their political instability, with those big elections coming, or with the euro, with France having a major shakeup and calling those last two elections. And I say that there isn't a country on the planet that has more political instability than the U.S. I mean, they executed their elections fine. There wasn't calls from the people that it was fraudulent or it was rigged or Russia was intervening in it. So maybe part of what's happening here in the dollar is more than about interest rate differentials. It could be about confidence. Do you see any of that in this move?
Well, I do think that sterling is acting like a champ. I mean, I think that the UK is almost like a bit of a safe haven.
Okay.
The French politics, we did see, of course, the euro sell off when the Macron announced that snap election. But you look at the 10-year French bonds, and the premium has narrowed over
Yeah.
Germany. I think that what's going to emerge in France is some kind of center-left government. The first initial challenge, I should say, is getting a prime minister that can win a majority of the National Assembly. And then the second challenge, of course, is fiscal policy, with the EU already citing them as an excessive deficit. And you've got, I think it was just yesterday or so, a Moody's warning of a possible cut in their outlook from stable to negative. But all that aside, or even taking that all into account, I think that, you've got the euro here at 109. You've got sterling at new highs of the year, testing the 130 level or approaching 130 level. And so I
They
think
all
that
look good.
they
Everything looks
look
good
good.
against the dollar.
Yeah, like I say, I mean, and you see what's happening since we've been talking.
Yeah,
Not only did dollar yen go through 160, but we're through
yeah,
159 and down to
yeah.
158 and a half. The move is accelerated here.
I'm
I'm
telling
just
you
gonna.
that the
Hey guys,
markets wait. The
I
markets
just
wait for you and I to talk. Go ahead,
Perfect.
Mark.
sorry. I hate to interrupt, and it does feel. And we were just chatting about it, guys. And good morning, Mark. Good to see you, and I hope you feel better soon. But we were just talking about how it might be some BOJ, Ministry of Finance intervention going on right
Yeah,
now too.
why not?
It could be. I mean, this is, I think, for me, I thought that there was a risk of intervention if the dollar didn't perform properly. That is, if the dollar didn't react to the fundamentals, soft CPI should be a weaker dollar. I thought the BOJ would be prepared to intervene if that was the case. I'd be surprised, though, if the BOJ was in. It could be. I'd be a bit surprised because markets are reacting fundamentally like the way they should. Lower U.S. interest rates, stronger yen, uh, and also the time zone. It's a bit tricky for the Japanese to intervene during U.S. hours.
Maybe the Fed's doing it for them.
Yeah, still, I would say unlikely, but it's possible. I won't rule that out yet, but I think this is oftentimes I think the market does it to themselves and then blame officials for it.
Well, the Chinese said they stopped buying gold for 2 months, and every announcement was bought, and you know who bought it.
Well, no, it's funny that you say that, Dale. What I'm looking at is a host of other foreign central banks buying gold. In
Yeah,
Europe, Czech and Poland. Just this morning, Uganda announced a gold buying program. I
yeah.
think that,
Our guy thinks that's a fade when Uganda finally gets on board.
yeah,
What do you think?
I think what's happened is that since the U.S. and Europe froze Russian assets, I think this was
Yeah,
I
yeah.
think this was a big signal to foreign
De-dollarization.
central banks.
Yeah. So we're so the milkshake theory, and you know that one, right, Mark? You
Sure.
know, that's
Yeah.
how the dollar goes to 140. The
Yeah. But
milkshake theory is going to evaporate under the sun of de-dollarization.
yeah. So just to get to that idea, that, right, is the idea is with the milkshake theory, right, is that foreigners, foreign companies, foreign countries have borrowed dollars because it's
Right.
cheaper than often borrowing in their own currency. And so when the dollar goes up in value against their currencies, they have to
Yeah.
chase it higher.
Yeah.
And this is not just a case of the depth of the US Treasury market. This is beyond the US Treasury market. This is sort of structurally global finance, the rise of the offshore dollar market, if you will.
Right.
And when people, so I think this de-dollarization is just really a wish. I think that there's really no evidence of it taking place on any substantial aspect, except, of course, China and Russia together.
Yeah. And whoever they're, part of their group, and more countries are starting to sign up with them, aren't they?
I don't really know about more countries signing up with them as far as trading in local currency. I think, of course, I'll tell you what really keeps me up these days. I just read a report that said that China was working with Belarus in Central
Yeah.
Europe on the Polish border to have military exercises. At the same time, Japan, Germany, and Spain are having military exercises in the Pacific. And this is, of course, like on the eve or on the afterwards of the NATO meeting. This to me is the real challenge. The Chinese manipulating the currency or limiting the movement, or what they've done this week, starting today, actually, is making it harder to short Chinese stocks. But I think this is all like a sideshow compared to the geopolitical tensions that are still seem to
Right.
be
Okay.
building.
So, and the North Korean troops fighting with Russia, Chinese troops in Belarus, um, looking at, who's going to be the nominee here.
Oh yeah, yeah. We're going to have
And
our own
is
political.
November a big deal to you, Mark?
Yes, but I think that the markets are a great anticipatory mechanism. I think that the U.S. election will become much more in focus in the coming weeks. Once we get past the French government getting put into place, I think the next big focus is the U.S., of course. So far, I don't see much of a market reaction, a sustained market reaction to
No.
the poor debate at the end of last month. This is what bothers me too, Dale. We're told that we're in the midst of a democracy versus authoritarianism. And I'm not sure I buy into that. But if that's the case, then having a debate before either candidate got the official nomination seems to be like cutting corners. Democracy is just as much about a process as it is about
Yeah.
the end goal. And so I'm very disheartened by what's been happening. And I think that democracy sort of got a black eye over these last couple of weeks.
Okay. Let alone January 6th, for almost 4 years ago. So there have been some black eyes, Mark. All we could do is nothing.
Yeah, and as we're
Trade,
talking, Dale, you see the
trade.
dollar has stabilized. I would look
Yeah.
still be. I think that this might be a near-term high in the foreign currencies. We get a quieter week next week from economic data. We got the ECB meeting next week, but they're not going to do anything. But perhaps still set the stage for a September cut.
Okay. So, if I know you guys enjoyed hearing Mark today, I always learn something from him, and his work gives me balance with the way my mind wants to run down rabbit holes. Sometimes Mark always straightens me out, and you need to check him out here at Mark to Market, making sense of global capital markets, and his X handle is Mark with a C, making sense. And you made a lot of sense today, Mark. Nice trade, and it's a teaching moment that when you trade, you're using the trailing stop to lock in the profits that you have. So the worst case scenario is you made money. So thanks for that teachable moment, and uh, I hope that whatever happens, um, that we are able to guide people away from being stepping on landmines. So you help do that by coming here, Mark.
Well, thanks, Dale, and thanks for posting my commentary. I like to, what I always wanted since I began my career is just to participate in the dialogue of the day, and you guys help me do that, so I appreciate that.
Yeah, well, you help by adding important content. So you don't give without getting. You know what I mean? So thanks, Mark. Look forward to talking to you in the fall when we're going to be closer to D-Day. We'll see what happens, but great to be with you on a day and get your big picture view that you think this dollar trend is for real, and just looking for a bit of a correction on this move. But this is a trend that could last for many months. To me, it seems that way. How about you?
Oh yeah, if we're right about this, this is a big end
Years.
for the dollar's been rallying more or less since the great financial crisis,
Yeah,
and that's
yeah,
one of the things I love about foreign exchange and why I think some of us, Dale, can have gray hair and stay in the business is that there's long-term trends in the foreign exchange market. 5 to 10 year trends are common
yeah,
compared to say equity markets or
yeah.
bond markets, which seem to be more tied to the business cycle.
Yeah, it always had the rep of FX of being, and even when it was the IMM, of currencies being the best technical markets. Always had that rep because it trended. Okay, Mark. Well, thanks, buddy. Have a
Thanks.
great summer, my trading warrior brother.
Good luck to everybody.
All right, everyone. So that's a wrap. Mark is also recorded if you want to listen to this again, and you could join the team on the Morning Edge in 15 minutes. Remember, don't just count your pips, count your blessings, and we'll see you tomorrow to wrap up with one more inflation number. Adios, everyone.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.